We're live. Do I look orange in this feed right now? I feel like I look like a pumpkin.
Very falling.
Maybe it's the lighting. I'm like, what is that? Oh gosh, jaundice or something setting in. So we are live. I know for those of us joining us, we are going to be talking. Tanner's going to be explaining the lock and shop today. So it's a program that we'll get into, but we'll give it a minute or two to let some folks join us. But oops, what do you think, Tanner? Of apparently we're supposed to be like high of 30 on Monday or something bananas like that.
30 degrees or what?
30 degrees. It's like a low of 20, a high of 30 on Monday. I'm like, oh gosh.
I guess we're looking at the start of our wintry campaign. Since it was 80 degrees out the other day, I guess that's about right for this area. I know me personally, like big weather changes really impact my sinuses, so I can't be alone.
I know. I'm the same way. I don't know if it's just like age.
Right.
But yeah, I know. I didn't realize that. I'm hiking tomorrow, and I was trying, like, I'm keeping a pulse on the rain this week, but I hadn't looked into next week yet. And someone mentioned it to me yesterday. I was like, Monday was digging out shorts for my daughter, and now I'm gonna need to find the snow equipment. Maybe I don't know.
Right. It's pretty crazy, but always the interesting part about Virginia for sure. So.
I know. And are you traveling? I know you're traveling coming soon. Hopefully that won't impact you at all, like whatever ice or.
Nope. So I leave bright and early on the 16th. I will be out there till the 26th. I'm looking forward to visiting the motherland for you and I.
Yeah.
And just kind of relax a little bit and spend some time on Vashon Island, my hometown.
That'll be good. My on the eastern side of the state, my parents have had snow the last couple days.
Really?
Yeah, like 3 inches. So.
Wow. Okay.
So yay for on your side. You'll be.
Yeah, I'm certainly a little brisk, but
yeah.
I'll give you an update on how Seattle looks once I have a chance to go. So.
Yeah. Well, you want to dive into rate talk and lock and shop program outline? Awesome. So you want to give us like just a high level overview? What is it?
Sure. So in most cases, when we go to lock an interest rate, we're doing them in 30, 45, or 60-day varieties. And generally that's our closing time, right? So client has now found the property, they're under contract, and we are then going to go ahead and choose an interest rate once they are ratified and lock them in. That is the general practice. And 99% of the time, you are locking somebody in on the property address. So it's not like you lock them based on your social. You're not locking them based on any other fact like city. It is just based off, here's the property, you are now locked on your loan. Well, what lock and shop is the idea that what about if I take longer to find a house, like I've lost out on a couple contracts, meanwhile, interest rates are continuing to go up, so I don't want to suddenly go from a 5 to a 6 to a 7 to 8. What about if I could just lock this in now and have this time frame to find the property that I'm looking for to purchase? And that is the idea behind lock and shop.
Okay, gotcha. So that makes sense. When do you feel like, obviously I know right now there's a lot of uncertainty going on. People are watching election results, all this stuff going on. When do you feel like this is a program that would most benefit someone?
So I think this program benefits someone who is really concerned with where rates are going. And if you are not somebody that is as concerned with where the rates are going or what the payment could potentially be if they get worse, then it's not necessarily something you might be interested in. But it comes down to your risk level. And I would use the example of everybody who's watching us or listening to us probably has homeowners insurance or auto insurance.
Right.
And we don't have those things because we, on a consistent basis, drive crazy or play with tiki torches in the living room. I've stopped doing that, Jess,
Yeah.
as
Try to
the,
avoid those things.
right. But we all have insurance for that purpose.
Right.
And every time you pay it, you don't even think about it. It's
Right.
just something you do, right?
Yep.
Well, lock and shop gives you the that peace of mind of like, I'm locked in. I don't know what's going to happen in the market. I don't really care because I'm locked in, and they come in 90, 120 day, 150 day, 180 day, 270 days, and even 1 year a
Wow.
chance to lock you in. So if you're concerned that the market's going to really go up, it gives you that peace of mind.
So I know the cost is probably a little bit different every day because it depends on how the rates open that day and things like that. But are you able to give like even like a rough ballpark range? Like if someone wanted to save even like a percent, is that like a 1 to 3,000 or is that like a 5 to 10? Are you able to give like just super
Sure.
rough numbers?
That is the one thing that I would say is a downside of lock and shop. At least how I'm able to offer it is there is an upfront charge to get you locked in.
Right.
Now, we can float the rate down if rates got better, but the charge is 0.5% of the loan amount. So just
Okay.
as a raw number, if we were buying a $500,000 home, we would have to charge $2,500 right up front to lock you in on the lock and shop.
So that's just to lock today's rate. That doesn't even include like if you wanted to also buy down or something.
Correct. That would be, it would lock you off of basically the pricing for today.
Gotcha.
So if
Yep.
we decided, well, after consideration, we decide we want to we want to buy down the rate, like you said, well, we wouldn't be looking at today's prices. We would be looking at when you locked in 60 days ago, 75 days ago,
Right.
whatever it was.
Okay. Okay. Gotcha. So for somebody who is maybe they're on a timeline, like they know they need to buy by February or whatnot because of, their PCSing or whatever's happening in their life, they have like this more finite timeline. Um, when does it become, or what are some of the things you recommend people weigh out? Because, of course, there's, like you mentioned, your tolerance for risk, and then there's the cash is king. So, and especially depending on your loan program, I know that throws in even another like ball in the air. But what are some of the biggest pieces of advice that you tell people to consider when they're thinking about this program?
I think it comes down to the things to consider are your payment shock threshold.
Okay.
Because if you are someone who, if rates go up and you had to pay $300 more a month than where you had to right now, it
Yeah.
might make sense. And you're really concerned, like that's, and concern being like everybody, of course, doesn't want to pay more money. But
Right.
like, oh my gosh, now I have to eat ramen noodles all the time, then
Right.
that's a concern. If you're like,
Okay.
oh, that's a bummer, that's not a concern. That's just an inconvenience you didn't want to deal with.
Right.
So
Gotcha. That
that
makes sense.
that's the way I would look at it.
And that fee you mentioned earlier, I'm assuming that gives you like a bit, like there's a base level of lock. And then if you want to extend it, the lock longer and longer, the fee probably increases.
Costs more. So
Okay.
once you can do up to 180 days um,
Okay.
with a zero point 0.5 upfront fee. And this
Okay.
is this. So just to clarify this, I, as the broker, would pay this charge immediately, but I
Okay.
would not pay the charge until I had money from the potential person to get them locked in. So I'm
Okay.
taking their money, applying it on my credit card, but then that's how that goes. Uh,
Okay.
so to answer the question, after 180 days, then goes to 1% upfront if it's like 270 or 365 days.
Okay. Okay. But for someone who's building or things like that, that might make sense. Or if, they're in the process and they're only, however many days out and things like that. Like you said, they're on that threshold where if rates keep creeping,
Yeah. Right.
wouldn't want to.
It really comes down to what do you think the market's going to do, um, and do you feel that you'll have a chance to refinance? Because
Right.
I would say, and I consistently say this, is that every 3 years I think people have a chance to refinance,
Yep.
and I would not be someone who wants to buy down their rate massively right now because I
Yeah.
think they will have that opportunity. But everybody, again, threshold for risk is different.
Right. Absolutely. No, and with the lock and shop, does that apply to all loan programs, only specific programs? Like, is it good for conventional FHA, VA, or is there a limitation on that?
It's from my understanding, it pretty much is all loan types with the property. Bear with me, just non. The only thing it's not allowed on are like they call them non-agency loans, but those are like bank statement programs and just stuff
Okay.
that's not your normal. Hey, I have pay stubs and I get W-2s or stuff like that.
Yeah. Okay. Gotcha. That makes sense. So basically, those higher risk loan programs are ineligible.
Yes, yes,
Okay. Awesome. Well, that's cool. I think it's a unique option, especially for the people who are leaning on the much more conservative side of shopping and again have a timeline that they know they need to move in. So if they are on a timeline and more conservative, that gives some option there. I think if someone were coming in, and I know hypotheticals are difficult, so feel free to be like, next question. But like for our VA folks, right? Like, I think that the interest rate reduction loan that a VA entitled person can utilize is obviously huge, and we are still, even with these increases, I correct me if I'm wrong. I'm still hearing we're expecting to be lower again by spring, hopefully. So paying 2,500, 5,000 up front when you might be able to refi by the time you even make one or two payment. Well, there's obviously the waiting time. Um, what would you say to someone in that position who has, again, I know it's threshold, but what would be like your advice to someone?
um, I would say if you have the money, like let's say you're selling your house and you're going to make a good chunk of change, and you want to get this locked in, and you're okay with this potential issue of, hey, I spent $2,500 and I didn't really need to. It turned out I didn't need to do that.
Right.
Well, that's one thing. If you don't have the $2,500, or you're really struggling, or you would have had to dig deep to get it, or ask mom
Yeah.
and dad, or whatever, then don't do lock and shop, I think.
It's worth it. Yep.
And to go to your other question too about refinancing down the road, that is always something to factor in when you're selecting an interest rate, and especially in today's market right now. I am not advising people to buy down rates. To save, to go from, for me personally, my thoughts are to go from 6.5 to 6.25 and
Right.
spend $7,000 or $8,000 to do it does not make sense right now.
Yeah, I think an important calculation that people should be running or having you help them with is, okay, if you're spending $5,000 and that's going to change your monthly payment by 25, 30 bucks a month, 5,000 divided by 30.
How long
How
is it going
long
to
is
take
it
you to
going to
make
take?
that back? Yep.
Yes. And are you going to be in the house that long even? I mean, do you think you can refi in that 4 or 5 years it's going to take to repay yourself when you could have put that cash somewhere else and, had more return on it?
That's
Um,
exactly how I look at it.
Yeah, and that's a hard concept, I think, for a lot of people to grasp, because, looking at the monthly payment, like 30 bucks a month. Well, even if you put that 5,000 into a high yield savings account and used it to cover that extra 30 bucks a month, you're still going to make more on the interest in that account than you would paying it up front.
Yeah.
So, plus then you have it in case of emergency or whatever else. So, some important calculations to run, as you're
Mhm.
processing all this. And I know that you could help and run numbers for people and show them, well, here's what. So if you're listening to this and you have questions and want to see the pros and cons and what the differences look like, obviously reach out to Tanner and, chat with him about your specific need
Mhm.
and your specific tolerance for a little bit of gamble.
Right.
So, and then there's a cost to a refi if you're not VA. So there's that to take into account too. Like, is it 2,500 bucks now or later? Then maybe the now makes sense. I don't know. It depends on your circumstance.
Correct. I believe that for sure. But we would have to point out to the audience that those that had done lock and shop 60 or 90 days ago would be really glad they had done it.
Yeah,
And I if I had been asked at the time, I would have told you no way the rates get to where they are right now, and I clearly would have been wrong.
yeah.
And so if there's people out there right now that are like, well, there's no way rates get to 8, it's certainly possible. And I also, though, am an optimist, and I feel they'll be back down in the 5s by spring. But that's me.
That's what I'm seeing too. But I mean, honestly, gosh, I think it was about 10 days before the Fed announced the most recent rate. I was in a continuing education thing where us agents were being told, yeah, expect to be back down in the 4s by the end of the year. Well,
They're going to have to
yeah,
hurry if they're going to get down to there.
yeah, like 2 weeks later, here we are. So, it definitely is tough. Everyone does their best job reading the, you know, tea leaves, but not a perfect science.
No, absolutely.
But well, I appreciate you letting us know about this program. And once again, if you guys have more in-depth questions or want to know about it and how it applies to your situation, make sure to reach out to Tanner. His information is down below here on the screen. You can always send a DM or leave a comment for us so we can get in touch with you, answer your questions. But Tanner, anything else before we hop off that you might want to share? In any way? Anything going on that we should be aware of?
I can tell you that I am possibly found a lender that will do the second mortgage on VA assumptions.
Yes.
And those that are not familiar with assumptions need to take my assumption class, and I'll bore them with all the details. I mean, educate them. Uh, so assumptions are going to become a thing in our market. I am personally involved in an assumption right now for a seller that I helped on the refinance and a buyer that I happen to do the pre-qual with. So even though I won't get paid, I will see how the transaction goes, and I'm excited about that. So then I'll be able to educate people. And though the second mortgage component, though, that's the biggest hurdle on these right now. And if there's a way to tie in taking over somebody's nice low rate and getting the second mortgage on it, it's gonna make sense.
Absolutely. So just to kind of catch everybody up real quick. So an assumption is for a VA or FHA loan, whereas if the seller has a current, 2%, sometimes you'll see an agent advertise that there's it's an assumable loan. So you could get this great rate. But the trick is if their mortgage is 350 and the sales price is 500, that difference has to be made up somewhere. And for a long time, agents were telling their clients, well, you have to have cash. You got to pay the cash difference. So what Tanner's talking about is getting a second loan in order to cover that delta,
Yeah.
basically. So, and I know when I talked the other day, obviously that's going to come at a little bit higher interest rate because it's a higher risk loan. But I think that that's something super interesting and makes assumptions a lot more feasible for people.
Yep.
Also, especially that second could be a smaller. It might not be as large as you think it might be, depending
Right.
on.
If it's a second mortgage for $80,000, or that's a lot more doable than a second mortgage at a higher interest rate for 400,000.
Absolutely. Absolutely. Yeah, much, much different. And then, of course, you have that low rate that's, we probably won't see again.
In
I
our
don't know.
lifetimes.
Yeah. Yeah. So once that second is paid off at that higher rate or whatever you want to do with it, then you still have this other one, which also then is a great selling feature down the road because the loan is still assumable. So, but okay, awesome. Well, we'll have to do a more in depth about that too once you have more details and we can lock in on that.
Sounds good.
Awesome, Tanner. Well, thanks so much for joining me today and for your time.
Absolutely. Thanks, Jess. Always a pleasure seeing you and interacting with you in the virtual world.
Yes, I know. We're very good at the virtual. Awesome. Well, we will talk to you soon. And hey, have a good Thanksgiving also.
You too. Thanks, Jess.
Okay, bye.